and efficient. John?
Yeah, that's the idea, Tyler. Ryan Williams is founder and executive chairman of Cadre, an online marketplace for commercial real estate. The company's raised more than $130 million and has done more than $5 billion in transactions since 2015. Williams cut his teeth at Goldman Sachs and Blackstone before striking out on his own, and Williams grew up working class in Louisiana. He became an entrepreneur early, starting a sportswear business on a shoestring when he was 13. His development accelerated when he got into Harvard, and he launched a program there to teach undergrads about financial services. The housing crisis had just hit, and he saw deals in real estate.
I pitched classmates on buying foreclosed homes in Atlanta that I thought were mispriced and distressed, renting them back out to people in the community, giving them an option to buy it back, and selling for 2 to 3x type multiples unlevered. And long story short is that business ended up becoming a nice way for me to have passive income on the side while my day job was doing banking at Goldman. We ended up buying nearly 1,000 residential units throughout Atlanta from 2008 to 2011.
Williams' mission at Cadre is to democratize real estate investing and cut accredited retail investors in on data and deals. Now, I asked him about icebergs he's watching out for in this volatile economy. Here's what he said he's making sure not to do.
If we want to scale our secondary marketplace, because we're the first platform ever to build an exchange and to let people trade stakes of real estate buildings, but we don't think about redemptions and thresholds on redemptions and guidelines around that. And so, to me, it's loosening of standards in exchange to try to grow. That's like the biggest iceberg and the biggest risk that I foresee. But it's also one we're all over, and one where as long as I'm in charge, will not be the iceberg that takes us out.
I was texting with Ryan this morning, and he told me the main thing Cadre has done since we talked about a couple months ago is capped all of its floating rate debt to protect cash flow. He says the portfolio is doing well because it's tilted toward multifamily, not office, and he's looking to play offense soon in areas like hospitality as uncertainty creates opportunities, guys.
Really fascinating. And I think the point you just made at the end there is probably the most crucial, especially for anybody who's looking to invest in commercial real estate right now, which is that floating debt, which is a big question mark for broader commercial real estate in general right now.
Important, I think, to note also, it is Black History Month. And access to real estate has been an issue, and redlining and other things, and he's flipping the script.
How does he pick what markets he's going to concentrate on?
Well, they've got a very data-focused approach to that, where there are gaps and where he sees opportunities. They actually put out a list of the high potential areas. They just sold some office in Colorado, right? They're tilted toward multifamily. They just sold some office there at a pretty good price, appreciation-wise for them. So that's part of what makes this unique. There are lots of sort of online marketplaces for real estate, but they try to be data-focused in how they find opportunities.